resistance. Like I said, what's a support? Support is like your floor. Let's use the basic realistic example. The floor which you're standing on, and we have the support, the resistance, which is the one above, which is your rooftop, or should I say your ceiling. That's the basic example. But when it comes to trading, support is like a price zone where price has to repeatedly hit or bounce back up or overcome selling pressure. Just where the market have to come down like this. Okay, let's say price is moving in this manner and it comes down to the support here. It's going to go back up and keep moving in this manner back to the resistance zone and all that. So we talked about support in our beginners class. But for now, we are going to just go deeper into it in the advanced. We understand. We're going to talk about it advanced. So, what's this support? That's sometimes, many of the time, where institutions place their orders and sellers tend to take profit or buyers tend to buy. So it's either your support you can place an order here like this. Most of the time traders will wait for the market to buy up to this point, just like you were seeing here. They'll place their orders here. This is a buy order, and sometimes you see traders that has already bought, buyers that already bought, using the support as their take profit. So now coming down here, you see a support line. If I enter this trade here, I'm taking my profit at this point. So sometimes price doesn't have to come down to like touch the particular level. It can just react to anywhere close to it. Sometimes it might just react to this point here before going back up. So that's it. It mustn't go down to where you have a support line, but sometimes close to it. So what is resistance? This is our resistance line here. The same thing goes for the resistance, where price tends to hit, then fall back, react to, then fall back, like a reversal point. You see for price buyers are buying, and all of a sudden you see the market having a pullback or reversal. So that's many of the times where the big banks and institutions tend to sell. That's where people go short. They place their sell orders at this point, as you see it here, for price to come down. Or many of the time, that's where buyers can just say, okay, this is where I'm taking profit here. Buyers might be taking profit at this point. So I think that's a little brief definition about that. So if we should go to the chart and we are looking for something like that. Look for something like that on the chart. What should we be expecting now? This is a ranging market. This is a ranging market here. And we also have this point here. We also have this point here, like as our support zone. And you saw the way market was coming down, reacting to it. Market came to this point. Market came to this point, reacted, went up, and just moving in that manner, just in this form. Check liquidity here a little before breaking structure below. Before breaking structure below. So most of the time we'll be having multiple clean touches, just like the structure I drew here. We'll be having multiple clean touches. Sometimes it might not have multiple clean touches. Sometimes the market might just be moving in a type of way, just like it's moving here. Sometimes the market might be moving like this, in a very clean, multiple touches like this. And sometimes it might not move like that. Sometimes the market might not move something like this. The market might be moving in this manner, which is actually how the market moves. The market might be moving in this manner, doing something like this. It's all the same thing, and the market will just keep moving like this. And if you draw your support and resistance line, you will see that the market was respecting this zone. It was respecting this zone, and at the same time, it was also respecting this zone. As you can see, it was also respecting this zone. So yeah, we have our support and resistance line. Many times this is how the market moves. It doesn't always move in this clean manner. You see, it doesn't always move as clean as this. It's just the paperwork. When in real charts, the market is always sometimes messy. So that's why I need to train your eyes to understand what's happening in the market. So the market moves like this many of the time. Sometimes it will move high up, and you notice there will be high volume in the market. If you go to like the higher time frame and on the 4 hours like this, go on the higher time frame. It's always better to spot those zones in the higher time frame, because the market tends to respect it a lot on the higher time frame, just like you're seeing here. This was supposed to be our support, and market came back to it, we tested and went up, and market is still going up. We still have more like that in the 4 hours chart. See the support here. Market respected that thing twice. Market respected this zone twice here. Also here too, we also have here. Market respected its support zone. You always see the market coming to respect that zone. Now we also have here on the resistance side here. I said the chart is not always clean. That is where we have like the trading normal price action. You hear something like the double top, the double bottom, and all that. But I don't really rely on that, because the market character this period is quite different. You have a lot of you notice something like shift of liquidity. You set a trade here and just going to shift for liquidity before making the main move. So I don't really put sometimes that double top and double bottom into criteria, because sometimes the market might strip liquidity before making the main move, or sometimes it's going to react to a POI before a support zone. So most of these points are created by the institution, where where they they set they place or they wait for they place orders and wait for the market to come, so they can take out points. Now if you notice here, this is a resistance zone. Now if you notice what is happening, the market has come back to this resistance zone after how many months? This is since last year December, and this is when this point is coming again. This is when the market is coming to this point, coming to this. And I said before that as we are going deeper, I won't be talking too much about support resistance. We'll start advancing it into what we call supply demand. From there, we'll start talking about liquidity and all that. So, if you can say, okay, institution, this is how institutions view their own support and resistance. For we retail traders, many of the time we want to buy at support, or we sell as the resistance. I'm giving an overall view of how the chart is. This is a concept for some people they use in trading. So you saw the way market reacted to this point. We have our support here and we have our resistance here. So I think I should name it. That's our resistance zone, and that's our resistance, and we have our support here. And our support here. So many of the time how institutions use support, because we are the retail traders, and many of the time you notice that price is going to come just like you're seeing here. This is the support line, but if you notice, I think by next week we should have a sweep at this point. You see, a sweep at this point. These are people's stop losses. People are here waiting for this market here, and you should check the pip. This is about 20 pips up, and I'm not even sure the market is done. So institutions are going to always come here to take out the liquidity, or push above the resistance, or push above the sub push below the support, to either take out buyers or take out sellers in the market. So that's why I said many of the time you are going to be seeing that the market is not going to be moving, just like you are seeing here. When we go deeper, as we are going, we are going to be talking about sweep of liquidity. Now look at how market took swept liquidity at this point. He took out this resistance on. That is how the institution, that is how trading looks like in real life. You will notice that the market is going to be taken out sometimes. That's why it's always good to set your SL, give your entries space to breathe. So you see it's going to just took it out and expected the move down. Then you notice the reversal, the way it is now, the market just reversed and start coming down again. It happens everywhere. Many of the places you are going to be seeing that. Many. It's only rare cases that you see that it's going to just respect it. You might not have a clean chart always. You might not be having a clean chart always. That's why I said the market is not always looking like this. It's always going to take out liquidity and stop losses and all that. So all this, when you see the market taking something like this, you can call it liquidity sweep. This is liquidity sweep. You can say stop hunt. You can say false breakout. What you're seeing here can be, you can call it those names I just mentioned here. You can say stop hunt because they are hunting stop loss at this point. You can say sweep up liquidity, and you can also say um, is it false breakout. So the market moves in that manner all the time, all the time, all the time. Basically, we just in the beginner's class just mentioned some few things, and if you notice also here, you see I'll be teaching you guys about entry model. So you guys were expecting it. This is a support zone here, and you notice what the market did. The same thing, pushed below, and this is our support here, and saw how the market pushed below before making the main move up. It happens like that on a random every time in the market, every time in the market. So The cheat code here is for you never to enter. Never enter a trade because it touches your support. Wait for confirmation. Always wait for confirmation, either from your candles or your model or your strategy used in trading. Always wait for confirmation. Always wait for confirmation. It's always very important. You hear traders saying something like, wait for confirmation before you enter a trade. Wait for this before you enter a trade. Never enter a trade at the support zone, because many of the time there might be a liquidity sweep at that point before the normal move is going to take place. So sometimes um, when the market breaks, you have something like this. Now, okay, let's say here was let's use an example here. Now, this was our zone. This was our resistance zone at this point. This was our resistance zone. Let's pick here. Notice how market broke structure here, and if you notice the resistance became the support. So anytime you see the market breaking above the resistance instantly turns into support. And if the market breaks below the support instantly turns to the resistance, like what you're seeing here. This turned into a resistance immediately this market broke below it and swept liquidity and came down before making another move. So instantly this became a resistance instead of the support. The support became resistance because of that happened. So what you should do as a trader, what you always need to do as a trader, never never um mark your support in the lower time frame. Many of the time you need to go from the 1 hour, either you mark from the 1 hour or you go on the daily. Sometimes I always like using the daily because it's more better. Mark from the daily or the 4 hours. 4 hours is quite good. 1 hour is okay, but 4 hours and daily or the weekly, you can mark your support zones there. It will help you to see, like the weekly is going to give you a broad view, or the daily is going to give you a better view of how the market is moving, and you can mark your support. You see how it looks like on the daily. You see how the market looks like on the daily. You are seeing everything. But if you go to the 4 hours, you have to scroll everywhere to before you can, or you zoom out a lot before you can see this. So I've spotted my resistance, I've spotted my support. That's okay. So before you trade the support and resistance, there are some things you always have to look out for. I've said in the video that you should, in the before, that you guys should read the candlestick Bible as much as you can, and also follow the videos I post and read some PDF and all that. Market follows a lot of things when it comes to support and resistance. Before you trade support and resistance, you must always have a confirmation model or a confirmation pattern to trade support and resistance. Now, what do I mean by that? Sometimes, if you trade support and resistance, you might be looking out for an engulfing candle. When the market hits your support, you look for an engulfing candle, just like you're seeing. This is an engulfing candle. You can use it as a confirmation for your reversal to enter your trade. You can look out for a pin bar. You can look out for a pin bar. We have the pin bar here. This is a pin bar here. This is a pin bar. This is a pin bar. You can call it a shooting star, but it's also a pin bar. It doesn't have to be accurate most of the time. So you wait for it to form many times on the support or on the resistance. Then you can either buy or sell. If it's the resistance zone that a pin bar forms, you can sell. If it's a resistance zone, that a support zone, you can buy. Look at, we also have another one here. You can use this as a confirmation, the pin bar. So the next one, you can also use break of market structure. That is when you are on a trend. When you say on a trending market, break of market structure, I can mark here as my resistance zone, and also mark here as my support zone. Mark here as my support zone. Once the market breaks above my resistance, I can enter the market. I'm waiting for it to come back to retest this point. It's going to come back here to retest and fall by, and you can see a rejection happening here. This is also a rejection candle. So if you don't see that one, you can also use this. If you can see a very bold, strong candle, like a big candle like this, that form, you can use it as a confirmation. This is an FVG that broke below this structure, broke the support, and you wait for it. Mark out your coin. Either you use percent. I'm still going to teach about this FVG and how to use the FVG. You can enter the trade here and you go down. If you can buy it here and you notice that the trade is going to buy it. This is a lot of pips that you can see here. On the 4 hours. This is almost 200 and something pips. So you also have, see, increase in volume. Some people use indicator. You can wait for liquidity sweep before you enter, just like I explained from the start of the video. This liquidity sweep, when you notice there is a liquidity sweep, you wait for reversal and then you enter the trade. You switch to the lower time frame and then you enter the trade. I'm still going to talk about time frames and entries again and teach you people how to break it down. So so when we talk about support and resistance, everybody, I like, just like I explained, I said just like I said support, floor, and resistance is what they call it, is the roof. Many of the time, it's not always um, what they call it. It's not always horizontal as you're seeing here, but this is always the best form of support and resistance. You can also use your trend lines as your support and resistance. This can also be your support. We've talked about higher highs and higher lows. This can also serve as a support, and this can also serve as your resistance. I see. Can also serve as resistance. So you notice how market comes to it, is reacting to it, and coming down, reacting to it. Using the same technique, we look out for engulfing, rejection candles, pin bars as it's coming to that zone, and you can just buy or either sell. Same thing goes anywhere. You can use that anywhere at all. We also have another trend here. We have a downtrend here. So we have also a downtrend. This is another downtrend. So you see, strip of liquidity at this point, and that's it. The market moves that way. The market moves in different ways. Some people call this flag and all that. I'm an SMC trader, so I don't really look at all these things. I don't use that for my trade. But this is it. You still need to have the knowledge as a trader. So we use different things. You can use the trend line, use the trend line model of support and resistance, and price will still respect it. Channels and all that, all the concepts are free. I think I mentioned like 3 types, 3 ways to mark your support and resistance. Even if it's on the trending market, you can just be marking your support and resistance and wait for it. I can use here as my support in the market that is actually trending. I mark here as my resistance. Even for the market to break out and come back, then I buy. I can also use here as my my as my support. So it's not really as difficult like that. So just like I said before, support and resistance is can also be seen as supply and demand. So the only difference there is supply and demand is for the institution, the big banks. We are the retail traders. So when it comes to supply and demand, we are talking about institutional or where institution place their orders, where they want to stop funds and all that. But when it comes to normal support and resistance, you're just talking about reaction, where the market reacts. Reaction, that's what you're talking about. Support and resistance is basically about reaction. The market comes to this point, react to it, makes a move below. The market comes to this point, react to it, makes a move up or down. So that is just up, and that's it for support and resistance. But for supply and demand, you're looking at the overview, view, bigger picture of where institutions they are placing their orders, where they are coming to take orders, where they are stop hunting and all that. So support and resistance, one thing about mistake people do with support is that you see the way my chart is now line. People a lot of traders that are into support and resistance they'll be making their chart so messy. You see a lot of lines, lines, and sometimes you'll be expecting that the market is going to be touching every point. The market is not expected to touch every point at some point. It's not supposed to. So if the market is actually trending, follow the trend. Don't mark your support and resistance against the trend. You saw the way I marked this one because it's trending up, and you saw the way I marked this one. If you see the market coming down, having a bearish market, respect the trend and mark your support according to the direction of the trend. If it's going up, mark your support according to the direction of the trend. If it's ranging, mark it according to the what they call it, the view of the market that is ranging. And also too another thing is never enter the market what they call it, never enter the trade if you don't have confirmation. As a trader you must have a confirmation pattern. If the market doesn't give you that, you're not entering the trade. And I just talked about some confirmation here, pin bar, and I made mention of engulfing candle, and I made mention of break of structure as your confirmation. And another thing too, if you're marking your support and resistance, always switch to different time frame to see what is actually in the market. You see, I've marked it here and I have gone to my daily. You can switch to your daily to have a better view of it. You can switch to your 4 hours just like that. So that's it. Like I said before, mark the higher time frame, mark support on the higher time frame, not on the lower time frame. Lower time frame, I'm talking about 1 hour below. 1 hour is fair, but anything below 1 hour is lower time frame. Um, what else again? What else again? Do I need to say? Always wait for confirmation before you can use the support and resistance as your entry. Wait for confirmation at your support or at your resistance. Always look out for liquidity sweep. If the market that spikes, always wait for liquidity sweep. So always, and also to don't just enter, wait for price to react to that zone before you enter. That's another one. And if you're placing your stop loss, never place your stop loss below your support zone. It should be above. It should always be above. Just like this. Your stop losses should always be above. Should always be above, just like you were saying. It should always look like this. Always be above. So it will not take you out. Then you can see you can enter your trade. So that's it. So like I said before, supply and demand is not really too difficult. So I think that's all. That's all about the support and resistance.